Tax time. Tips for property investors. It's that time of year again. Tax time for property investors. As the end of the financial year fast approaches, this is the ideal time to discuss some tax planning strategies with your accountant. Owning an investment property is a rewarding experience, but it doesn't just come in the way of capital growth or rent. There are many tax entitlements that you should be aware of, and planning ahead will boost your overall returns. As your accountant will be entering their busiest time of year, it's ideal to schedule an appointment in advance. Most accountants have systems in place to either meet you in person or through their virtual office or a Zoom call of some sort. But first up, we wanted to offer you some tips to help you get the most out of your tax situation. We aren't accountants and we don't pretend to be. We do certainly work very closely with a number of tax agents and certified accountants who would definitely be able to take your personal circumstances into account. In this podcast, we want to take the opportunity to highlight some important tips that will make it better for you between you and your accountant. First up, keep everything on file. There are many tax-deductible expenses relating to property investments. If you are wanting to make the most from your tax situation, you need to keep evidence on file in order to claim it. Holding too much is a better solution than not enough. Investment property expenses. There are many internal and external property expenses incurred when owning an investment property. Here are a few that may be tax deductible, but we strongly urge you to seek advice from your accountant before incurring these costs if you're doing so for tax purposes rather than just for property maintenance. Gardening, so landscaping maintenance and lawn mowing. Cleaning, which would be carpet, steam cleaning and professional cleaning services. Controlling pests, so obviously treatment and removal of pests. And finally, plumbing are just some of the investment property expenses. Insurance. It's important to insure your asset. Some insurance premiums may be tax deductible. You may have landlord cover, building insurance, or contents cover, to name a few. Each of these policies provide a different purpose and may be tax deductible. Property ongoing costs. These aren't property expenses. There are a number of outgoings that a property investor may need to pay to keep the property. The three main expenses known are council rates, owner's corporation fees if applicable, and water rates. These may be tax deductible and should be discussed with your accountant. Depreciation. One of the most widely reasons investors turn to buying property is the tax deductibility through tax depreciation. Assets including property values generally decrease over time. Interestingly, the property goes against this trend as demand for your property will increase the value regardless of its getting older and older over time. There are many internal fixture and fittings that have a shorter lifespan, such as ovens and dishwashers. These are also known as plant and equipment. Tax depreciation can essentially be claimed for up to 40 years depending on how you've approached it and how old the property may be. The best means to claim this effectively is to employ a quantity surveyor to assess the depreciation of the property in question. They establish a year-on-year table that confirms your maximum entitlement for each year. This is effectively a non-cash expense and generally the largest tax deduction for property investors, well, consistently anyway. Your accountant can explain this in more detail and in accordance with your personal circumstances. Borrowing expenses. For most property investors, they purchase a property using borrowed funds, an investment loan. When acquiring an investment loan, you'll be paying monthly interest, incurring monthly fees or administration costs. When acquiring a loan, you may incur other costs such as lender's mortgage insurance or broker fees or loan establishment fees or valuation costs. These can be treated in a variety of ways. Many can consider it as part of the cost of purchasing the investment property. Please ensure you keep your loan offer documents and statements so your accountant can discuss and apply the right tax planning advice for you. Property manager fees. Employing a property manager is a key ingredient to a successful property investment. They will source and investigate tenant applications, inspect the property regularly, and collect the rent. They can also take care of paying your property expenses by deducting these costs from your monthly rent. The property manager will issue you an annual tax statement that outlines all of the income and expenses for the financial year in question. The property management fees are also generally tax deductible. The annual tax statement is a great piece of evidence to reduce your administration burden at tax time. Capital gains tax. When disposing of an investment property or selling it, if a profit has been made, you are likely to be paying capital gains tax. The best step to approach an investment property sale is to discuss this in advance with your accountant. You'll be able to identify what your potential capital gains situation will be and can learn how you may be able to reduce capital gains tax that comes with it. Don't leave this conversation for after the property sale. It's too late to implement any strategies at that time. So do you need help? At Crest Property Investments, we specialise in sourcing brand new and off-the-plan properties for buyers. We see great value in owning brand new investment properties as opposed to old ones. New properties are very appealing as they represent longevity, low property maintenance, and great tax benefits. You can learn more about these tax benefits or tax deductions through the Australian Tax Office website. They have a lot of useful information to help. If you'd like to learn more about buying property, you're very welcome to contact us directly. Have a look at our website to learn more about us at www.crestproperty.net.au. Thanks for listening.